All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I apologize for my voice ahead of time, but tis the season, I guess. Let's get to it. Interesting open on the market here this morning. So let's start with the challenge and Netflix and CSX. Let's get the pricing filled in here on those. So CSX is 375. And Netflix here is 9 or 1085. So 375 and 1085. All right. So there we sit, just about 3,600 here. Netflix has been all over the place, hasn't it? This thing has, I referred to it as a ping pong ball this morning, as it has, really kind of had, we got in, it sold off into the close, sold off the next day. Okay, recovered the next day nicely. All right, ready to go. No, 2 days chopped down. Yesterday, nice gap up, nice run, follow. All right, we're going to get some nice follow through. It's going to pay off really nicely, and we get essentially what amounts to a downgrade from an analyst, and boom, right? But Netflix is very much what the automated algorithm challenge is meant to do. It's meant to put us in positions where we have that home run potential, right? Where if that home run potential doesn't break and doesn't break out, okay, we still have a spot to be able to get out and move on and move to the next. And we're going to ultimately probably have to do that here with Netflix, barring some sort of, monster rally into the close. But as it does hit its time stop here this afternoon. And so, we'll hold it here through this afternoon and pull it when I get on video later on here today. It's been one of those trades where the stock's gone our way, and the option's gone our way a little bit. But, you see what the potential is and how that option moves. You go, come on, just a little follow through and boom, we're there. Anyway, not getting that here today. CSX has gone a little bit differently here for us. It, is basically once we got in, it moved up 50 cents afterwards, went up yesterday, is going up today. Just shy of its price target, 74.75 is the price target there on CSX. So, we're 60 cents away from hitting that, but in a very nice breakout here for CSX. Now, one of the things that I think people overlook is how much CSX and oil are tied together with a lot of these railroads. They ship oil, right? A big portion of the cargo that they ship is oil, natural gas as well. So they tend to do well when the oil stocks start to do a little better, and we are seeing that, right? We saw the signal on EOG last week, and EOG's been popping here since. We saw Chevron yesterday absolutely blitz higher, gap down today, but continue to see some of that strength here, as the XLE makes a really nice rebound. Here this week, and started on Friday and has really followed through nicely so far. So CSX, I think you could throw into that category of of sectors of trades, whereas goes the energy sector, so will go a lot of these rails. They're all a little bit different. Canadian Pacific, a little bit different. KSU, a little bit different. But you kind of see the overall is very positive for these rails. And one of the things we are seeing is transports break out into new highs. Right. This is not a bull market that where we're seeing just some oddities or some unusual stuff where, all right, market's going to new highs, but it's not being led by some of the key sectors out there. Now, this new high is being led by transports that's breaking into a new high, right? It's being led by semiconductors, SMH, which is breaking into a new high, and it's being led by financials, which are breaking into new highs. So no matter which theory you want to go to Dow theory, on bull bear markets, great. You got a Dow theory bullish element here. You want to go to that old adage, as go the financials, so go the markets. Boom, you've got that. If you want to go to the whole idea of, well, you know what, the market's now more tech than anything, well, led by semiconductors, which is a very prominent theory out there over the last 20 years, you got that. And, this is just one where this is a bull market where everything that you would want to see is there. Now, sometimes that's a little bit scary, but that is the environment that we are in, and we continue to see the metrics, fairly bullish there. Now, there are no new challenge trades on the board, right now, so I'll continue to hold Netflix. I'll continue to hold CSX, here into the close. We'll see where they are. Now, we did have two triggers yesterday. One was Pepsi on the downside, and we haven't seen a lot of downside triggers this challenge, and we did get Pepsi yesterday. It's kind of run away a little bit this morning, so probably not something I'm going to enter here into the close today when we free up the cash from Netflix. But we'll see, where it sits. We also saw IBM trigger bullish yesterday, so we'll have the option to get into those. We'll also have the option to get into anything new here today. And on the downside crossovers, we have GLD, Home Depot, J&J, and Visa, all with downside crossovers. These are all stocks that have had upside crossovers. Here of late, Home Depot, had a bullish signal when we got into Netflix, and, it has just really kind of, Netflix at least has had a little bit of upside. Home Depot just has really struggled to get out of this consolidation, and really break from that, that consolidation grip that, that is on it. We see GLD pulling back nicely here today, but no bearish signal there. And then on the upside, we have Altria, Target, Whirlpool, all with upside 3-7 crossovers. Target's really interesting here to me. Very interested to see if this, lands as a trigger here today. Where I stand with Target. I'm very bullish when it comes to Target. I do think this has a good shot at the 150 to 180 area over the long haul here. But it has options that most certainly move and move aggressively. But we are coming into earnings season for a lot of the retailers. So keep that in mind. In fact, Target's exact date, let me pull it up here. Again, this is just one source. When I'm looking exactly, I want to see, 2 or 3 sources. But the 20th of November, so here in, 2 weeks, we will see Target earnings. So plenty of time to play that if it does land on a signal here today. We also have, upside crossover on Altria and Whirlpool. And, neither are triggering right here, but you can see kind of Whirlpool with similar Target type action, and Altria here as well, with the nice action after that really ugly day on Thursday of last week where it had that sharp downside reversal. But I would be very surprised if Altria or Whirlpool triggered today. Target has a shot. It has a shot there. So we'll see kind of how those play out, here into the close, along with, the other stuff that is out there. Now, this morning we saw S&P futures take a bit of a move. Take a bit of a move here. We see this initial bounce, and basically you see the volumes down here. You always know the market open when the volume increases, and the market open, it sold off initially, and, sold off, about 5 points, not a big deal, and then, jumps. In a matter of 2 minutes, it jumps and erases the 30-minute sell-off that we saw this morning, and it jumped on data, and it jumped on the ISM non-manufacturing data, or what some refer to as the services data, right? And so we see this jump, and then tick, 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 tick. All right, that reaction gets erased, and the algorithms come in and they take it on down, and that's what we saw really kind of come into play. And The market, the volumes have normalized here since, and not a whole lot of stuff since. But let's go take a look at that ISM data, because is there something in this that may suggest that, hey, you know what, there's trouble on the horizon, and things may not be great, grand, or wonderful, or was this just an uptick that algorithms were looking to sell into, just based on the overall market open? The ISM number came in at 54.7. Okay, 54.7. Now, compare that to the manufacturing number that we saw this week that was negative, that's showing contraction. 54.7, that's a pretty good number. It's not great, it's not, all aboard, everything, wonderful, but it's showing growth, and it's showing, more importantly, an acceleration in growth, right? September was 52.6, now 54.7. So it's growing at a faster pace. More importantly, new orders. They're growing now at a faster pace. Employment growing at a faster pace. Inventory is down. That's what you want to see. Prices down. All right, great. Backlog of orders down. Great. New export orders, they fell. That's not great. Imports, they fell. That's not great, right? But, when you come in and you look at it, it's not all wonderful, but the two most important factors, new orders and employment, are going the right direction. They're growing at a faster pace. The other two that I'd really like to see confirm that, imports and exports, they're not. They're slightly shrinking. So it's it's not where everything is all confirmed here. But this is a pretty good number. It is a pretty good number here for the overall economic outlook. If you want to look at it that way. If we look at bonds and how they reacted to this number. Sorry, my thinkorswim's being a little slow. You can see that bonds sold off again to this number, right? They did not have the type of stock reaction that we saw. We saw monster volume come into bonds, and they sold bonds. They pushed interest rates up, and that is the market basically saying, look, we see some economic growth on the horizon. And we're gonna. It's no longer a safety, as nice of a safety factor to be in bonds. And we have seen bonds and we have seen gold pretty much do the exact same thing over the last 3 months. And we'll be very interested to see which way these break, because if we see them break down, if we see the TLT break on down and essentially erase the August run. We could be in for a really interesting bear market in bonds. And you say, well, how's that? When the Fed's cutting rates, how do we have a bear market in bonds? Well, that just tells you about, how much is priced in. And then with gold, which, longer term I'm bullish on. After this run, I've not been willing to get in. I wanted to see a pretty solid pullback. Haven't seen one yet. But it is showing signs of that pullback really emerging here. That's Barrick Gold, which is the same thing as GLD, basically. But I want to see, a further pullback. I'd love to see gold trade back into the 130s, here on the GLD. And, we'll see if that, happens. But probably most importantly out there this morning, market may be selling off on some really good data. Or I should say good data, not really good data, selling off on some data there. But we see a lot of differentiation, right? This isn't a market where it's just selling everything. This is a market that, is continuing that bullish style of high differentiation, where some stocks up, some stocks down, and, we see real estate down, we see healthcare down, utilities down, tech down, consumer discretionary down. So if this is what your watch list is made up of, today looks really bearish. But energy, financial, industrials, consumer materials, all trading up. This is very typical of what we've seen in bull markets. It doesn't really pay off a lot of investors because, they're not heavily involved in the energy sector. And so the biggest winner on the day is something that fund managers aren't very involved in. where two of the bigger losers, or three of the biggest losers, healthcare, utility, and tech, are areas where fund managers are heavily involved in. So, if you have the TV on today and they're interviewing different fund managers, I would be surprised to see a little bit more fear kind of in their voices, just based on today's action, simply because of where the money flows are here today. All right. So anyway, that's quick look at the market this morning. Again, no change for the challenge. Holding on to Netflix and CSX here, and we'll ultimately have to move out of Netflix into the close. If CSX can move up a little bit more here today, we might be in a position to be able to adjust that, which would be very nice to see. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.